easy. You will be able to rewatch it later on. Okay. Also, as you've probably seen, we have a special guest today, Jack Green. So Jack Green is more an FA kind of guy, sort of fundamental side of things. I'm more a technical guy, as you guys know, but we thought it might be interesting to give you both sides today and do a little partnered stream and see how it goes, you know. So during the stream, if you have any questions, as always, feel free to ask. So let's maybe start by a little introduction. Jack Green.
Hey guys. Yes, of course. Thank you for having me, George.
Awesome. Perfect.
Yeah, no, so a lot of your followers are probably more trade-oriented guys, so I'm here to give you guys another perspective on Bitcoin. So today what we're going to do is maybe look at Bitcoin a bit zoomed out. So we're going to check the technicals and also the fundamentals of Bitcoin.
Mm-hmm. All right, awesome. So yeah, can everyone hear Jack, just to make sure?
Yeah, I've got a new mic from today, so hopefully it's all good.
Well, I can hear you, but just making sure the chat can hear you as well. Just type yes or no in the chat. Yes, all right, perfect, good to go. So I'll start with the technical side of things, and then we'll give the mic to you.
Of course, yeah, good idea.
All right. Can't hear Jack, someone says.
Oh.
But you don't hear him? You should be able to hear him. Desktop audio. Only... Yeah, they can't hear you, I think. Maybe it's a setting in Discord. The input setting, like the one I had.
Yes, let me check. Is it from your side or mine, you think?
I'm not sure. I mean, for me, it's on desktop audio as well, so it's the first time we do this, guys, so I'm not sure how this works exactly.
I'm gonna press also share system audio. Maybe it's gonna work like this. Can you hear me right now, guys? I'm sharing my audio of my screen, but I'm not sure if that's the thing.
Can you hear him now? Or still nothing, guys?
Maybe it's in your OBS that you have to enable desktop audio or something.
Yeah, but desktop. Can you guys hear the music? Yes, right? So if they're able to hear the desktop audio, they should also be able to hear your voice, I think. Music, yes. Weird.
What we can do is I call you on Messenger or something, and we mute the Discord audio. Maybe that will work. What do you think?
Sure. But yeah, then the quality will...
Yeah, I'm not sure how it's not working.
Yeah, we're using OBS.
But it worked on my side when we checked it, so...
I mean, yeah, I suck at these things, to be honest. Desktop audio. Hold on, maybe I have to add... Maybe it's only the music from Google Chrome, and that's why... but I'm not sure how to add the audio from Discord. Properties. Try again now.
Do you think it's fine now? Hello guys, can you hear me? What did you change?
Anything now? I changed a setting in OBS, but yes, okay.
Oh,
Good to go.
all right. Maybe let's redo the introduction. What do you think?
Yeah, sure, let's do it.
All right, guys. First of all, George, thanks for having me. So as George said today, we're going to look at Bitcoin a bit zoomed out. So we're going to look at the technicals and the fundamentals of Bitcoin. So what are basically the fundamentals of Bitcoin? So how I always try to look at Bitcoin is how can you value it? How can you value something that nobody really knows what it is? So it's really difficult. So that's why one of the best methods to value Bitcoin is how George is doing it, by doing technical analysis, because nobody really knows how you value Bitcoin anyway. Another couple metrics you can look at is the Metcalfe's law. So that's when you look at the adoption. So that's basically like how the US dollar works. The dollar has value, the more people uses it. So if everybody uses it, it's valuable. You can look at it if Bitcoin for you is a store of value. Like for example, gold, and you can look at it, what's the price relative to gold, or you can look at it at stock to flow ratio. So these are a couple of metrics you can look at fundamentally, and that's what I'm going to discuss today. But first we're gonna have George go over the technicals.
All right, perfect. So some people said the volume was a little bit too loud, but it should be fine now, right? Seeing good, perfect. All right, so we'll go like this. Obviously, next time we'll be much quicker with this. It's the first time again, so yeah, happens, you know. Okay, I'm gonna start off with Bitcoin, right? So starting off on the monthly. Yeah, obviously we've seen all of this upside. So in my opinion, high time frame wise on the monthly, there's nothing too much to be bearish about, right? We closed the monthly candle of March very strong, the highest monthly close ever at all-time highs, right? So everyone expected straight continuation into 80, 90, 100Ks, right? Everything seemed easy again. That's usually when things calm down a bit again. And that's exactly what we got last month. A little bit of a choppy month, I'd say. But honestly, from a monthly perspective, nothing happened. Okay, so we stayed within the range of the previous monthly candle. So I'm going to immediately start by marking out the levels on the monthly that are going to be key. And those are going to be, in my opinion, March high. So I'm going to mark that out here. March high. And March low. All right. So why these levels? We haven't closed a monthly candle outside of these levels yet. Okay, so basically inside bars, whatever you want to call it, areas of liquidity, right? And as you can see, the monthly range low has been swept in this monthly candle, and the monthly highs, not only March high but also April's high, right, have been unswept. April. high. So let's just mark that out. Purely liquidity areas on a monthly basis. Okay, so immediately from there, what I've been saying for ages, honestly, any sweep sub 60k would have been a great buy, in my opinion, for the long term. Right? If you're targeting 100k plus, anything below 60k is a great buy on the spot side of things. As always, what I'm saying is big difference between spot and margin. So that's just purely talking from the spot side of things. And in my opinion, a chart like this, nothing bearish, right? We closed the previous monthly, as I said, above former all-time highs at 60k. So we even closed above 70k. And all we've seen in last month's and this month's candle is basically a reaccumulation range, in my opinion, that will eventually lead to higher prices. That would change if we would close a monthly candle below March low, but until then, all I'm seeing here on the monthly is last month's low swept and clean monthly highs to the upside unswept. Okay, so let's move over to the weekly. Weekly, right? What happened in the last weekly candle? So that was a big sweep below March low, right? That we got. In my opinion, taking out a lot of stops below here. Clean liquidity below all of these lows got taken, and we haven't taken much liquidity to the upside here, in my eyes, which is why I'm cautiously bullish on the weekly as well. Okay, what will be the next draw on liquidity? In my opinion, well, the next draw would be on this weekly high, not only because it's a clean high, right? If I zoom into the daily, not because it's right all of this downside and then the bounce, lower high, right, clean high that led to the sweep below these clean lows, but also because it's resting right below daily supply up here. Okay, so this area was a sideways price action that led to the dump, sideways price action that led to all of this downside, right? Telling us that people were accumulating shorts in this area. Whenever price returns to that area, they're gonna want to defend their positions, which might result in selling pressure. Okay, so that together with the clean high resting there and probably a lot of stops resting there as well makes it a very interesting area. So as I said, I was looking for longs. I initially started longing already on the first dump. I think it was somewhere around here. Started swing longing, right? But then eventually we got another sweep. Yeah, I think I already got stopped out here because my stops were too tight. But then we got another deviation or sweep below major lows, right? Triple lows right here and another clean weekly low here. And obviously this one. Quick deviation, quick sweep. And what did we say in the previous streams? We wanted to see either a wick and a close back inside the range, or a close below was fine as long as we didn't held below range low, but we saw a rather quick reclaim of this weekly range. And that's exactly what we got, right? We closed below there on the daily. As you can see, everyone was panicking. A lot of bearish posts on the timeline, just for us to get one day of a little bit of ranging down here, and then just boom, massive smack back inside the range and a strong close, right? So that leaves me to think that we will at least see one more spike up to the upside, and maybe even this was the sweep or the deviation below the lows that we needed for us to see 80, 90, and 100K next. Okay. So the fresh new position that I entered the long, right, was from all the way back there. Posted it live on Twitter as well. Held it from here, held it, and then came all the way back down again into the red. But there was no point in closing for me, because why did I keep my stop this wide compared to this entry right here? And why didn't I keep it below these lows right here? Well, exactly for the reason that we've seen, to what we have seen being the quick sweep, allowing for price to sweep the lows once more and then running to new highs. So that's exactly what we got. We got the sweep. You could say I got a bit lucky, right? Because my stop was there, but I allowed for price to sweep the lows before breaking back inside the range and ultimately still trading to new highs. So about that last part, we'll have to see if that's going to happen. But in my opinion, we'll at least see some more upside. So for the lower time frames, what I like doing is marking out Monday high and Monday low as well, just purely to mark out areas of liquidity as well. That's basically what I do every time, right? On all time frames, look for key highs, look for key lows, look for highs and lows look for lows that are being swept, clean highs that are unswept. Look for where drawn liquidity is, right? And as I said, high time frame draw is, in my opinion, to the upside. Why? Because we've swept high time frame range lows and have unswept clean highs above, along with this high right here. Now zooming in to the 4-hour and seeing our Monday range, right? You can already mark out some beautiful plans here, because we have Monday low unswept and Monday high also unswept. So there is no clean draw on the lower time frames for liquidity, right? What you could say is that this spike here yesterday took out some clean highs up here, being this one, but also, and maybe even, maybe even more importantly, the highs up here, right? Spiked the highs quickly into some low time frame supply up here and got rejected pretty hard. So that leads me to think that we might go for Monday low first, right? Because the low time frame draw on liquidity is locally to the downside. Maybe take out Monday low, reclaim, and if we reclaim that, that would mean an unswept Monday high, a swept Monday low, an unswept weekly range high up here, and a swept high time frame range low. So all factors basically lining up for the draw on liquidity being to the upside, which could offer you a great long opportunity. So if we get that spike down, right, also lines up with these spikes down here showing us demand and the area where we started pumping from, right, being this big candle, right, some sideways price action, boom, and then we got the upside. People were accumulating longs here. So once again, demand and lining up with our weekly, even our monthly level. So March low it is, right? All lining up in that same area. You can also take a look at where our OTE is going to be resting. So from the most recent low to the most recent high, where do we look for longs? On the retrace into OTE. Wow, look at that. OTE 705 level lining up exactly with March low. So if we see price back towards that area, I'll definitely be looking to get some more exposure on my long probably, and maybe even add to my positions. But for now, right, my stop is still there. It's still safe. Maybe if we see something like this where we go down, sweep Monday lows, sweep some more lows, maybe even fill some inefficiency down here, right, into OTE, into that demand, and then see some strength, right? That's where I'll be looking to add to my longs and maybe trail stops, towards here or below the OTE area. All right. So yeah, that's basically gonna be it. So that's the bullish plan. Now, what if nothing of that happens? Let me quickly remove all of this again. This and these ones as well. Don't need that. Okay. So what would be the bearish play, right? So as long as we hold above this green box that I marked, being the confluence of March low, of OTE, of demand, right? And the liquidity area being below Monday low and some inefficiency down here, as long as we hold above there, I'm bullish. Although if we see a move like this, right, I don't want to see us spend too much time down here, but I want to see a quick reclaim of Monday low in order for us to move higher. If that doesn't happen, right, and we get a smack below this area, that's where I'll probably close my my longs if I'm not stopped out already, of course, and I'll be looking for Bitcoin for prices to trade lower. Where, well, then we'll take a look at our high time frame levels, and that's the level that I've been watching and talking about for ages, being our monthly range from 2021 all-time high, initial all-time high, to the big dump, right, lows, then the sweep above all-time highs again, and then all the way back to the lows, accumulation below range low, big ass reclaim. If we draw that monthly range, you can see the mid-range is pivotal here, right? Beautiful example here. Order block resting right there. So then I'll be looking for price to trade closer to 50Ks, maybe even under 50Ks. I personally don't think that we'll spend much time below 50K, even if we close below this green area, right? But that will definitely be the area that I'll focus on. What would invalidate that scenario? So for me, it will be simple. If we break below here, right, look for price to drop lower and then accumulate more spots. If, for example, we do something like this, break here towards here, right, and then see a reclaim of this area, that would mean another break back inside this monthly range. If we get some significant closes, you have your reasons to still re-enter longs and target new highs. All right. Is that clear for everyone?
Damn, honestly, George, that was super clear. I was thinking when you were talking, damn, you explained it better than my uni professor.
Thanks.
So I'm sure the chat agrees.
Mm-hmm. We'll see if it's clear. If there are no questions, it's your turn.
Yeah, we can wait 30 seconds.
Mm-hmm.
No, honestly, very well explained. And what I was thinking is, and it's for everyone in chat, when I look for a guide that explains TA and your strategy that you're using with the Fibonacci ranges, I'm going to look your stream, I'm going to look on your Twitter, and I'm going to look what you're doing. So, and I'm sure that's why everyone is here. And I hope that everyone also enjoys the more macroeconomic things that I'm about to show a bit later on. So we'll see.
Yeah, I'm sure, but it's something new. I hadn't really heard of that way of valuing Bitcoin yet before I met you, and I was immediately amazed by how different it is. So I think it will be interesting.
It's different, but it's also a bit more long term. So the thing is, I don't trade on leverage. I never did. Maybe a couple of times, only to take short positions to hedge my spot positions. But for the rest, I never did it. And the reason is simple. It's a quote from Warren Buffett. It's you can only lose money in 3 ways. It's what was it? Liquor, ladies, and leverage. So it's easy.
Yeah, I mean, it's not for stressed people, I'd say.
Yeah, I wouldn't be able to sleep, I think, if I was playing on leverage.
I also only trade leverage with lower amounts, you know. It's and the most money is made with spots. That's true. So leverage is just like people who got into trading. We're all the same, you know. We want to make money fast, and then we get to know leverage, and then we see that it's possible quickly with it, and you're gonna do it anyways, you know. For me, it was the same. I didn't have the patience, especially when I was younger, to buy spot and then just sit there and do nothing. Well, that's the way to do it, but.
But that's the thing, I think, when you're doing only spots, right now it's after the fourth halving, you need a lot of money to be able to make a little bit of money right now, because we won't see the same multiples as we used to. So I started in 2016, I think you a couple of months later in 2017. It was possible back then. I remember when I was investing in some altcoins, I went to sleep, boom, it doubled the day after. I don't think we will see this again. Maybe meme coins, but that's something I like to stay away from as well.
Yeah, I've been saying the same. I mean,
but I think leverage is fine. But you have to know how to trade. I don't think it's for everyone. I think only 1% will gain money, and I think 99% will just lose money. So, and that's what you have to know. If you use leverage, you have to know that you're playing against professional traders like you. So you have to know, yeah, I'm trading against George, or I'm trading against some quant firm. You have to know that. So you have to think, do I have an edge against them? If the answer is no, it's simple. Then you will just lose some money.
Yeah, true, but everyone starts the same, you know. All those guys also started by losing you, so
that's true. Yeah,
there's reasons for both. So, but if you keep going, yeah, you might get better. That's the thing. All right, so I don't think that we've got any questions.
But we will do Q&A anyway later on in the stream, right?
Yeah, sure. So I'll share your screen now.
Yes, right? I'm gonna do the same here. All right. So first of all, like I said, I'm only a spot trader, but I also look at charts, obviously, but more in a trend-based strategy and more zoomed out long-term vision. So I have here the Bitcoin chart on the monthly, a very clean chart. These are only the Fibonacci ranges of last cycle's top and this cycle's bottom. So these are the Fibonacci ranges. How you can use them is basically if there is no more price action above. So if we're in price discovery, you can use it to, well, a bit not guess, but predict where the price is going. And as you can see here, the Fibonacci level, the golden ratio, the 1.618 is aligning perfectly with the psychological level of 100K. I know a lot of people, a lot of friends of mine, everyone I talk to wants to sell at 100K. Everyone thinks Bitcoin will go to 100K, and this aligns perfectly with the Fibonacci levels. So that's why on my charts, I drew a big red box here, which means sell some spots. Another thing I'm using is the Ishimoku trading system. So this is very easy. That's just a trend-based trading system. You just have to see if you're using it that you have the correct settings. So it's basically these are not the normal settings, these are the crypto settings. I think it was Carpe Noctem, Josh, that invented these settings, and if you backtest it, it works perfectly. So looking at the monthly, what you have to look for is a bullish TK cross, which means so the blue line is a Tenkan, the red line is a Kijun. If you see the blue line crossing the red line, that's called a bullish TK cross, and that means buy in, go all in, especially if it's above a bullish cloud, so green cloud. We only saw this, I think, twice before in Bitcoin's history. I think it was here. Look what it did after, and then it just sparked the previous bull run. And you cannot see it because it's too tiny, but here we had it as well. So the monthly is looking extremely bullish just by looking at the Ishimoku trading system. Let's go over to the weekly. So what I wanted to say for the weekly is you have to look for edge-to-edge plays. So basically what it means is if the price enters the red cloud, most of the times it goes back towards the other side of the cloud. Why I wanted to show you this right now is because on the daily, we have the same, but inverse. As you can see here, the price entered this cloud after a bearish TK cross, which means price will go down. So if you see this, which means when we were here at the end of April, sell all your Bitcoin. And you can see a couple of days later, Bitcoin price dropped almost towards the other edge of the cloud. Unfortunately, I had a lot of money here on the bottom of the cloud and I wasn't filled. So I'm a bit annoyed right now that I didn't buy more because I'm leaning still a lot of bullish right now. But so be it. As you said on your part of the stream, it can go a lot lower as well. So I have my bits stacked here a bit lower. And as you can see on the weekly, I have some on the Tenkan. And a very, very good buy, which happens normally once every bull market, is the bull market support band. It's the 21-week EMA and the 20-week SMA. It should touch it, well, historically, it touches it one time and afterwards it's up only. And it just touched it, but the problem was I was away, not on my computer, and I had my bits here, so I just missed it, I think, by a couple of dollars. But that's fine, I have invested enough. Let's go over to the fundamentals. What?
Happens, you know.
It happens, and it's fine. You cannot buy perfectly, you cannot sell perfectly. That's just the way it goes. When I give some advice, well, not financial advice, but when I give some advice to friends or family members, I'd say never go all in and never sell everything. That can never be the plan. Always have some money left to buy when it drops, and also sell when it goes higher. So you can never be all in, you can never be all out. Let's go over to the
DCA is some say it's a meme, you know, but in my opinion as well, it's one of the best strategies for the long term, especially for Bitcoin to do it. You know?
Exactly, and that's the best advice I can give right now. So whatever you do, you can watch the whole stream. The best advice there is, if you're not 24/7 glued to your computer, is just DCA every week, every month with an amount you can miss. I said it to my father, and what he's doing already 6 years now, just DCA every month, same amount. And I think he outperformed most of you guys. So
yeah, it's crazy.
Yeah, it's true, and it works. And even there was a study done by a broker. I don't know what the name was, but they said they did a study over 10 years, I think. And the investors who outperformed everyone were the investors who were dead, which just means dead people outperform traders.
Yeah. I haven't heard that before, but it's...
Yeah, you have to look it up. Yeah. All right. So the most important thing right now for the markets are the US spot Bitcoin ETF inflows. I think by now everyone heard of it. This was really, really important because we didn't have a US spot Bitcoin ETF. The word spot is really important because that means when people buy into the ETF on their brokerage account, so for example, the issuer, let's say BlackRock, has to buy the Bitcoin on the markets. So this means that Bitcoin is pulled away from the markets. And as you saw here in February and March, when we had the most inflows, this was about 30 to 50% of all the Bitcoin buying pressure from the markets. So this right now is just the most important thing right now. And you can just see that the chart at the charts, when we see here February, March, this was when we reached the all-time high. It's when we reached the all-time high in inflows. And that's also why we dropped here, as you can see, May 1st. I think I can even look it up on my chart. I didn't check it before, but I'm sure May 1st, it's the day we dropped. And that's just normal. Also, well, that's not the only reason. You also always have to look at a couple of indicators. But BlackRock, the biggest issuer, didn't have inflows for about 3 days. So everyone was concerned. Everyone was thinking, wow, BlackRock, biggest ETF in history. What was it? 77 days of inflows that will just continue. But that's not true. That cannot happen. There has to be a day when the inflow stopped. And it was last week. Another thing, very funny. That's not why we went up, but GBTC. So normally, the red here is GBTC. They had inflows. I think it was yesterday and also on Friday. I don't know how it happened. Maybe it was someone a misbuy or something. Because the thing is, GBTC right now. So you can buy it. It's the same as the other ETFs, but they have, I think, it's a 1.5% management fee. For example, and the other ETFs, I think BlackRock or even others, they have like 0.05%. It's very low, so you cannot compare it. And they did it. Why? Because it would slow down the GBTC outflows. And well, they knew everyone would want to sell their GBTC, their Bitcoin, so they could gain more and more fees. So, well, these are the ETFs. Most important thing. So you can look at this. Next, I have here the GBTC outflows. So basically, GBTC holdings were at the beginning at 600K. Now it's at half. So this is very bullish. You have to look when it will be sold out because they cannot sell forever. The moment GBTC holdings will be out of Bitcoin, that's extremely bullish for Bitcoin. Then we only have ETFs where you can buy the Bitcoin. Well, of course, the ETFs can also sell. That's what we saw the other days as well, that the other ETFs can sell as well. But when the GBTC is drained, that's super bullish for Bitcoin. Because you have to know the inflows, they will just continue. Because it's not very easy for big corporations or funds to buy into a Bitcoin ETF. They have to do a lot of board meetings, a lot of... it's not very easy. Also, I think I have a tweet right here. Like, for example, Morgan Stanley, they had to file to the SEC to get Bitcoin exposure for their funds. It's not very easy, and it doesn't happen like in a month or two. It can go over for some years.
Yeah,
exactly. Then what I have as well is Hong Kong had some ETFs as well. I think they went live the end of last month, so it was the 30th of April. It was not a success. It was not a success. Why? Because the three biggest issuers, so they only have 3 ETFs. You can see the tickers right here. Were very small issuers. It was not a BlackRock, for example. So as you can see here, it's a bit of inflows, but slowly. Every day a bit. So I got the numbers right here. So they seeded it with a lot of Bitcoin because they were hoping to have a lot of investors. And that's what you see here. The seed is very high. And then daily, it's nothing compared to Bitcoin. But it's okay. It's just another product on top of all the things we have. So I read as well, this was today, so I wanted to include it to the stream as well. South Korea, I think there were elections like last week or something, and the new government, they want to allow spot Bitcoin ETFs as well in June, which is super bullish as well. And I think the whole world is starting to recognize Bitcoin and will want to launch some financial products around it, which is all
for the long term.
Long term is very bullish. So I think that's what you can get away from my stream at the end. Long term is looking extremely bullish. If you want to buy, that's why we say DCA, because the long term is super bullish. The only thing why you can watch Bitcoin, the chart and all the news is if you want to buy a bit lower. So in short term, it can be a bit bearish. If you want to buy a bit lower, it's fine. But you have to know in the long term, spoiler maybe, I see Bitcoin going to 100K in Q4 this year. But that's another topic. But
yeah, no, but I agree. It's the same. I mostly only look at the chart, but obviously, you always have to have the fundamentals in your mind as well. But purely looking at the charts, the long term, it's looking great as well.
Yeah, exactly. And I have a quote in mind. I think fundamentals tell you what to buy, technicals tell you when to buy it.
When to buy. Yeah, exactly.
So the fundamentals tell you to buy Bitcoin. Then you just have to listen to George, and he's going to tell you when to buy it. But let's go on. So there are not only spot Bitcoin ETFs, there are only also a lot of other ETFs, a lot of other products like ETPs. And we had that in Europe for some time. And this is a very good chart where you can see the outflows of all the ETFs, of all the products, Hong Kong, Europe ETPs, all the ETFs. And this is perfectly to look at, as you can see here, because they already exist from previous cycle. When the inflows into these ETFs stopped, we dropped afterwards. And you see it right here, right now. So we had the top of the inflows March 13. And I think March 13, I'm not exactly sure, I can look it up, was the top, the exact top of this local top of this cycle. Well, for right now, probably in a couple of months we will be higher. But this was a local top. So inflows play a very, very big part in the price action.
Interesting.
Next up, the second most important thing for me is the interest rates. The interest rates, why? Let me quickly go over to this one. So this is maybe a bit controversial, but for me it's true. For me, it's not the halving that dictates the Bitcoin cycles, but it's mostly the global liquidity cycles. And they happen to align all the previous cycles. So if you can see here, this is from Delphi Digital. All the previous cycles happen to align with the global liquidity cycles. Global liquidity just means, for someone who's not familiar with it, how easy it is to get money. Or if the government is printing money. So if there is more supply. For example, how can you see this during COVID? This is right here. There was a lot of money printing, and also they put the interest rates down to 0. And then you can see they dropped. And this happens every time, and it's not something that I'm inventing, or this is also called the 4-year presidential cycle. And basically what happens is always before the elections, the job of now Janet Yellen is to get her president elected again. So what do? They print a lot of money, they lower their interest rates so that the economy is pumping, and that everyone says, whoa, it's because of the Bidenomics, economy is growing well, stocks are going up. And then afterwards, so they fuck themselves, sorry my language. And then 2 years afterwards, we go down. So that's why I'm thinking, here you can see the probabilities. This is from the CME group, the futures. So basically you can bet on interest rates going up or down, the predictions. As you can see here for June, we're seeing no change. And that's more for people that follow my weekly stream. I'm talking about this already from my first stream in January. And before we were about to see a change in May, I think it was. But because everything is at an all-time high, every US index, stock index is at an all-time high, gold at an all-time high, Bitcoin almost all-time high, the Fed will not lower their interest rates because they simply cannot do it. Because if they lower it right now, inflation will just start ramping again and they're in a lot of trouble. But on the other hand, I think they will have to do it because, like I said, the presidential election cycle, I think they will do it. And according to the CME groups, to the predictions here, we will normally see it around September. So looking at this, if you believe in the liquidity cycles and if this affects the Bitcoin price, you should start moving your funds to Bitcoin around August to be ahead of the rate cut.
Yeah.
And to add to this as well, the previous FOMC meeting, so where the chairman talks, where Powell talks, when they will cut or when they won't cut, he said, I have it here, and I quote, "Next move will be a rate cut." This doesn't mean on the next meeting date they will cut, but it certainly means that they will not raise their rates anymore, but they will cut them. And I think he said it, if I'm not sure, I think right here on Thursday was the meeting, because he said that one line, market went up. You can look at TA, you can do whatever you want, but news and fundamentals affect price. It's just as simple as that. And for me, this is the biggest indicator to allocate to Bitcoin or not to allocate to Bitcoin.
Yeah. Clean.
Yeah. And you can see it right here. It's very easy. So for example, the global liquidity, you put it next to the Bitcoin price and you see it just follows the Bitcoin price, basically 1 versus 1. It's, I don't know if you see my screen, it follows it basically. And it's not only Bitcoin, it's with everything. It's with stocks. For example, I have a lot of friends who are into Pokemon cards. Obviously, Pokemon cards do better when interest rates are down, when everyone is gambling. Because when it's easy to get money, so when you can get a loan for free, people just start to gamble and gamble and gamble. It's the same with, for example, that's more for
watches.
crypto people. Yeah, that's what I wanted to say. Watches, it's exactly the same. So look at this as well. But this is more, like we said in the beginning, macro zoomed out orientation. So this is not something you have to look at to, am I going to buy this week or am I going to sell? No, this is, am I going to buy this year or not? This one I liked as well from Capriol Investments. This is so US liquidity, the reverse, the federal balance sheet, and the reverse repo, and the US Treasury account. So this is all together, so which forms the US liquidity. And here you can see the cycles. But the problem is right now, because we have a lot of high interest rates, liquidity was going down. So it's a bit bearish for Bitcoin this, but I'm still hopeful because, it's Powell that said himself, next move will be a rate cut.
Yeah.
All right, moving on. Like I said, it's not the halving, but of course it plays a big factor. It's not negligible either. So, oops, it's a bit too zoomed out. Here you see the Bitcoin inflation rate versus the gold inflation rate. Let me explain it for everyone. So the Bitcoin inflation rate, is basically how much supply goes onto the markets, not onto the market, but is adding towards the circulating supply of Bitcoin every year. So basically the Bitcoin mined by the miners each year, which resulted around 1.7% before the halving. So every year there was 1.7% more Bitcoin than the previous year. Which goes to the miners, obviously. And that's my next point. So because of this halving, miners last year had 12 billion sell pressure. So each year, they have to sell it because they have to pay for their electricity and their equipment, etc. So there was 12 billion of natural selling pressure. Right now, this is halved. So there will only be 6 billion selling pressure, which is a lot. But you won't feel it right away, right now. You will feel it
again for the long term.
Yeah, this is more long term, and you can chart it out. I have some charts here, so you can. Maybe it's not very clear on this one, but the data is 60 to 75 days after the halving. You can feel the supply shock. So basically, what happens is right now. Let me show. This one, right now, the Bitcoin price to mine a Bitcoin is around 80K. It costs 80K to mine a Bitcoin, and a Bitcoin is only $63,000 price. So what happens is very easy. The miners are not selling because if they sell right now, they're losing and they're at, they don't have profits. So it's very easy. And this is the same. So I always look, when I look at this chart, at a lot of indicators because, the energy price is different in a lot of countries, so every site has another value for the energy value. So, for example, this one is way higher. It's 94K to mine a Bitcoin, which is extremely high. And this is a site you can look. You can see it here in my search bar. I have already in my bookmarks from 2017. So this is something I look at, not daily, but surely monthly. When it costs more to mine a Bitcoin than to buy it, then you buy Bitcoin. When it costs less to mine a Bitcoin, then you just sell because you know that the miners are selling as well and that there is a lot of selling pressure. So the math is very, very easy. One thing I wanted to show as well, and then I'm going to move on, is the hash rate. So this is the most bullish chart in Bitcoin. And that's just, so you know what the mining difficulty is, George? It's just how hard it is to mine Bitcoin, right?
Yeah, exactly.
So, and this is just showing that the network is getting stronger and stronger and stronger. And that it costs more and more for miners to mine Bitcoin. As you saw here, it costs 80K to 90K to mine Bitcoin. So there won't be a lot of selling pressure anytime soon. And as you can see here, look at this. So this is very beautiful. So after every halving, this is what happens to the Bitcoin price. And you see it always starts 60 to 70 days after the halving. So if we follow this trajectory, but let's say we have
starting at 63K.
Yeah, but let's say we have diminishing returns. I think as we go easily to 100K, 200K, that's my prediction this cycle. And you see, we always have diminishing returns. So this was last cycle, I think, this orange one. Yeah, I think we will see 250K.
Yeah, at least.
All right, where was I? Okay. Another thing is you can look at the seasonality. One thing, maybe I'm gonna ask a question to you. Did you hear of the saying "sell in May and walk away"?
Yeah, of course.
Yes. So, and this is pretty common to the equity guys, the stocks. And I think it comes from England, where basically the stockbrokers in May, they just stopped and they went on holiday in their beach houses on the beach, and they didn't touch a trade or invest till September, October. And in America, it was the same. So everyone was just stopping. Every hedge fund manager was quitting and didn't buy it. So they just sold their position and they went to the house in the Hamptons. And because this happened year after year, stocks started to perform worse and worse and worse every time in May, June, July, August, September. Because, well, it became some sort of meme. But because it became some sort of meme, it was like a self-fulfilling prophecy. That it started to happen every time. And I think it's the same for crypto. I think especially in crypto, all the guys that made a lot of money from crypto, they will just go to Dubai now, or maybe not Dubai because it's too warm right there in the summer, but they just will take a holiday as well. So this is one bearish thing. And I don't know if I have the chart for it. No, I don't have the. I had another chart and it was just saying that if you just invest in September and you sell in May, you outperform the stock market like on a 10-year basis by 10x or something. It's something crazy. And as you can see here,
that phrase came from this. To be honest, I knew the meme, but I didn't know where it came from. So it's interesting.
Yeah, behind every meme there is some sort of truth always.
Yeah.
But you can see it very clearly in the Bitcoin monthly returns. So as you can see here, August and September is awful for Bitcoin. Mm-hmm. And the best returns happen after November to December, February. Yeah. So I don't know how much you have to take this into account, but it's something you can look at.
Yeah, I feel like this one's a little bit more. I mean, you always have some green months in August and September as well, and some bad ones in the bullish months. So, but in general, I mean, it makes sense to keep it into account. It's the same in TA, you know. It's look for confluence and look for the most things to line up with each other, and then base your strategy off of that.
But to be completely honest, I don't really look at this, maybe for 1% or something, but it's just something to keep in mind. Yeah. What's very important is the interest rate decisions. That moves the price. This doesn't move the price. It's, how you say it, fugazi.
Exactly.
All right, next up, I have some on-chain metrics. This is something you can look at as well. This is the MVRV Z-score. So this is basically a long-term indicator for Bitcoin that helps to identify when the price is extremely over or undervalued relative to its fair value. Yeah. As you can see, it always has like a mid-cycle pause when the level is right between 2 and 3. It always happens. And it happened right now as well. So I posted this, I think, 2 or 3 weeks ago on my Twitter. I said, guys, look, MVRV Z-score has a local top. Maybe it's time to sell. It dropped a little bit right now. But this is something to look at. But one a bit better is, it's here from checkonchain.com. It's also the one who created this metric, is the AVIF ratio, which is basically the same as the MVRV Z-score, but this just doesn't take into account the dead coins. For example, Satoshi's coins or something. This only takes into account coins that will most likely move during the cycle. Yeah. So same thing here, when you can look at this, the first line, this most likely indicates a top or a local top, which we hit right now. So it was the same at the top of the previous cycle and at the local top of the cycle in 2019. So this is something you can look at as well. For me, on-chain metrics, I don't look at it often, but when these big on-chain indicators tell you to sell, it's best to look at some other indicators, like George said, trading or interest rates, and to see if you can, and start being cautious. Yeah. But for the rest, it's still looking very bullish. This is the Bitcoin heater, and I think George is looking at that as well. It's just if the open interest is if there's a lot of greed or a lot of fear in the market. So if this is at this high when we saw the top, which means there was a lot of leverage in the system, and eventually this has to be flushed out. Now we're at the bottom. I think George knows this as well. There's not a lot of leverage in the system, so it's looking very, very healthy.
Yeah, mindset. It's the same in TA, and it's what I use just in general on Twitter. You can even see it without looking at a chart like this. When everyone's euphoric and everyone's posting, we're gonna make it Lambo, you know. It's time to be a little cautious, and the exact same the other way around. When everyone's scared, everyone's saying it's over. I think I could literally just trade based off of that and make money. Like, I mean, of course, with low amounts of spots. But yeah, it's crazy how that has helped me in the markets as well by identifying local tops and bottoms. This one was the same, the most recent one. We saw the dip sub 60K. The sentiment was that bearish. Everyone was already talking about 50K, about 40K.
Exactly. And then, boom, it was the same with Capo that wanted to go to 12K. Like everyone wanted to buy at 12K, but it wasn't going to happen.
And then it doesn't happen. Exactly.
It's also a Warren Buffett quote. No, what was it? Buy when there is fear in the markets, or I don't know. I don't remember it.
Yeah, I know what you mean.
Buy when everyone is sell when everyone is greedy. Buy when everyone. I don't remember, but you can look it up.
Yeah, something like that.
All right, let's go on to the next metric, and then we're almost done with all my fundamental metrics. I hope everyone enjoys this. So this is called the NVT ratio. So this is basically the on-chain transactions to the market cap. And this is what I was explaining in the beginning of the stream, the Metcalfe's law. So maybe let's open this first. So basically the Metcalfe's law, this is how you value networks. And if you say Bitcoin is a network, like a currency network, like the US dollar, a network only works if there's more participants. For example, if you use an app that I wanted to say everyone uses, but maybe not everyone, Tinder, it only works, and it will work better the more participants there are. You cannot use Tinder with 3 people. Same with the monetary network. You cannot use it if there is only 15 people on it. So, so as you can read right here, the value of a network is proportional to the square of the number of users, which is true. And so you can see it here. If there are a lot of transactions on the Bitcoin network, which means a lot of people are using it, it's undervalued. So basically, this is also by Capriol Investments. You can look them up. They have great charts on their websites. So basically what they do is they do the market cap divided by the on-chain transactions. They did this since 2016 and they made a range of it. And right now we're at the bottom of the range. So which means Bitcoin is used a lot for the price it has.
Yeah.
Which is super bullish as well. So looking at only this metric signals a strong buy. And for me, Metcalfe's law is one of the best ways how to value Bitcoin. Because for me, it's still a monetary network. Well, it's everything. It's a monetary network. So Metcalfe's law you have to use. It's a store of value. So a store of value, that's what I said in the middle. It's when it's the same as gold. So how hard the currency is. So that's what I forgot. So basically how they value gold is like the same as you would mine it. So gold is valued how much it costs to mine gold. And so this is something how you can value Bitcoin as well. So if it costs more to mine it, like I said, then you just buy. Simple as that. So most of my metrics are signaling a strong buy. But I'm still a bit cautious here. Yeah. I want to finish with that. So this was my...
Yeah, thanks for explaining. I think it was very interesting. And I think, the takeaway is similar to what we do in TA. And that's that you don't look at one thing and base your decisions purely on one metric, right? But you look at the different ones and look for confluence. It's exactly the same how I trade. Look for things to line up with each other, and that's how you make your plan and your idea. And even then you can be wrong, obviously, but in the long term you should be more right than wrong, I guess.
And I think you can even combine both TA and fundamental analysis. If they line up, then it's just perfect.
Yeah, exactly. It's true. The more the better. So the chat, if you have any questions, feel free to ask. Pablo Discobar is saying it's very interesting. Yeah, I only joined 10 minutes ago, but I like the point of views. Awesome to hear. Trader John Wick says just in Fed rates, keeping interest rates where they are for longer than the public expect. It's much more likely than raising rates. I don't know what your opinion on that is.
Yeah, so the thing is, it's longer than usual, which is why the cycle right now for Bitcoin will start a bit later than usual. What I want to say with that is altcoins. I know it's a Bitcoin stream, but altcoins perform better when the rates go down. And I think we will see it a bit delayed this cycle. So normally after the halving, we see a little bit of a alt season, but I think it will be a bit delayed right now because the Fed is delaying their decision as well. So to answer on the comments, why do they do it? Because everyone just thinks that they will cut interest rates because everyone thinks everything is going up, like stocks, gold, Bitcoin. But because everything is going up, the Fed doesn't need to cut their interest rates. So it continues already since May, because normally they would have cut in May. Well, that is according to the predictions here. But this just continues because everything is going up, because everybody thinks they will cut rates. So because everyone is because everything is going up, they don't cut. So I think that answered the question. I don't really think it was a question, but I explained it for everyone.
Yeah, makes sense. Someone asks, do you also look at new wallets?
That's a good one. What do you mean with new wallets? Like, for example, when there's a big whale buying, or I know one important one was the Mr. 100 guy. So I think it's anonymous guy or entity is buying, what was it, every day or every week, 100 Bitcoins. I think he already got 2.5 billion or something. So yeah, this is something you can keep in mind and look at it, because probably it's maybe nation states that are buying Bitcoin. So yeah, of course, on-chain indicators, And I mostly use it even to buy altcoins. So when I see big whales accumulate some altcoins, then I think, okay, they must know something I don't. So it's interesting to look at it as well.
Yeah, I guess he means, I think I saw like a metric with wallets holding at least one Bitcoin. Is it not that one?
Yeah, and I think I even saw it passing on Twitter today. That's a very good one as well. And I think what it was there were a lot of whales accumulating Bitcoin right now. And this is always very bullish because institutions and, more intelligent money buys earlier than retail. So which means that normally Bitcoin price should go up because institutions and big addresses are buying more Bitcoin than the fishes.
Mm-hmm.
Well, I was thinking to add it to the stream as well, but I couldn't find it anymore. And yeah, but exactly maybe that's maybe next time, of course. So, and that's something I want to say as well. So if you guys like this sort of content, put a comment under the video on YouTube or on Twitter, and then we can see if we can arrange this another time as well.
For sure. I've also posted Jack's Twitter in the chat, and after the stream, the video will be uploaded. His Twitter and YouTube channel will also be in the description, of course. Someone just said you can just hear the anticipation and joy in Jack's voice when talking about the future. That's beautiful. Have you looked at the correlation with crude oil? He also asks.
Not directly the correlation with crude oil, but crude oil is something which does better as well in these kind of economic environments. For example, I don't know if you saw my tweet, but I posted 4 economic assets, investment assets, to invest in this economic climate. The first one was Bitcoin, and the second one is energy, because we're in kind of a war climate, not war climate, but risks of war. And oil does very good when a war is coming or during a war. As well as I had like energy stock, XLE, I have uranium. And I even think in this climate, you can just hold your cash on a high yield savings account and take the 5% yield. It's not bad either. I don't know if you guys saw the annual shareholder meeting of Berkshire Hathaway with Warren Buffett. I think they have the most cash on hand as they had in ever, or some, I think it's ever. And they said in this climate, the best you can just do is put your money in a high yield savings account. I think he said he had it at 5.4%. This is the best you can do. But you have to know as well, Warren Buffett with his billions, he has to invest otherwise than us. We can buy shitcoins, we can put $100 there, $1,000 there. For him, it doesn't matter. He has to allocate billions immediately. So, of course, that's different. But to answer the question, Bitcoin and oil, not directly, no.
All right. Let me see. What someone says, Jack, what would you need to see in your FA for you to turn from cautiously bullish to full Lambo Deegan bull?
Well, first of all, the most important one, like we saw during COVID, when everyone was scared, the only thing you had to look at, what will the Fed do? And the Fed brought their interest rates to 0. They were even talking about going negative. Then you just go all in leverage. Then I would even borrow some money to go all in if they drop their interest rate back to 0. So
I'll give you some then. All right. Any more questions, guys? It's been over an hour now. I think we had a great stream, to be honest. I hope you all enjoyed it. I hope you enjoyed it, Jack.
Yeah, very much. And I learned a lot during your TA part, to be honest. Like I said, it was like a professor explaining the TA of Bitcoin.
Well, same the other way around. It's interesting to see both parts, like you said, and combine them maybe even in the future.
I got just one question here. I'm sorry, from J. Armo in my chat. He says Warren Buffett quotes, "Diversification may preserve wealth, but concentration builds wealth. Do you think this applies to crypto?" And sorry because I know you wanted to end the stream, but this is a very good quote, and this is something I have in mind every day because this is really important, and it's true. So by diversifying your wealth, you cannot create wealth. It's good when you already have a lot of money, but it's not the best if you want to create a lot of money. So you have, and that's another quote, go all in where you have a lot of conviction. And that's what I did as well. This is maybe not related to Bitcoin, but I told it to George. Most of my money is allocated into a very, I cannot say it because it's not public yet, private equity company. And I invested it because I have a lot of conviction they will outperform and it will be the best. Well, I can say it, it's a video game, I think, but it's completely under the radar for crypto people. I think this will be the best game that will come out next year, which will integrate crypto. And I've put more than half of my net worth in it because I think this will just outperform. And that's just answering the question. Yes, I believe 100% in it. Building wealth is by concentrating your bets. And I think it's the same in trading. I think, George, you can answer this question as well. I think when you see a very good trade, you place more money, right?
Yeah, exactly. I mean, it's also, if you would ask that question to a lot of the guys on Twitter, right, who sort of made it, you know, you will hear 9 out of 10 of them will answer you the same, that they took the risk early on by putting a lot of their money into a single thing and not by indeed diversifying at the start. But it's when you're young and that you have to do things like this, you know, you don't have the risk, you probably don't have a house yet, you don't have to pay the bills, you have no kids. Yeah, exactly. You can take the risk, so that's the time to do it.
Yeah,
so
100%.
I also agree, of course.
All right, now we can call it here. I enjoyed it very much. Thank you a lot, George.
No worries. All right. So, guys, if you enjoyed, make sure to leave a like, subscribe, go follow Jack on Twitter. I posted this Twitter in the chat here. I will post it again right now. There we go. So go follow him. His YouTube will also be in the description. And I will see you guys in the next one, probably on Thursday. All right, Jack, big thanks, and see you next time.
See you next time, guys. Bye.